Let's begin. US CMA Part 2. First mock out of 4 mocks begins right now. The capital company has decided to discontinue a particular product. What have they decided to do? They have decided to discontinue a particular product which is produced on a machine that was purchased 4 years ago at a cost of $70,000. Please try to understand the first statement here. The machine was purchased 4 years ago at a cost of $70,000. Sir, it is a cost incurred in the past. It is a sunk cost. It is a what cost? It is a sunk cost. Sir, sunk costs are not relevant for decision making. Sunk costs are not relevant to decision making. The machine has a current book value of 30,000. Okay. Due to technologically improved machinery now available in the marketplace, the existing machine has no current salvage value. So if you sell this machine, you're not going to get any money. The company is reviewing the various aspects involved in the production of a new product. Involved in the production of a from the new product, whatever revenues you will get are incremental revenues, means additional revenue. They are relevant to your decision. They are relevant for your decision. Please try to understand this aspect very, very clearly. The engineering staff advised that the existing machine can be used to produce the new product, means you don't need to buy a new machine. So there is no additional, or I will use the word incremental capital cost. What is there can be continued. Other cost involved in the production of the new product will be materials. My dear friends, what's the beauty of materials? Every time you want to make a new product, you have to put in new materials. Materials are incremental. Please try to understand. Direct material are a variable cost, and this variable cost is relevant because I'm sorry, मेरा relevant का spelling wrong हो गया. That this is a relevant cost. Why it is relevant? Because it will be additionally incurred for the purpose of your project. You have labor. Obviously, this labor is again a variable cost. It is relevant to your project. It is how much? 5,000. Ignore income taxes. What are the cost? Relevant. What are the cost? Relevant. Sir, the cost that are relevant for this decision are $25,000. Your answer is option number B. Your answer is option number B. Let us quickly take a look at the other options. Sir, why you are saying you want to take a look at the other options? Because I want to logically and strategically eliminate all the other options as well. Please pay attention to the solving. 30,000. What is this 30,000? Sir, this 30,000 is the WDV of old machine. Sir, it is a sunk cost. It is a, and it is not additionally incurred. It is not specifically incurred for this product. It was incurred in the past. Sir, it is not relevant. Of course, your answer is 25,000. There's no doubt about it. Your answer is 25,000. Sir, 55,000. Sir, 55,000, how you will get, How you will get, 55,000? Sir, you will get 25,000 out of your direct material plus direct labor. And then you will add 30,000. Sir, this 30,000 should not be added. Sir, 95. 95 means 70,000 cost of your original machine plus the 25,000 of your material plus labor they are taking. This is also wrong. All logically eliminated. What is the right answer? 25. Why? It is a relevant cost. It is a what cost? It is a relevant cost. So we have agreed and understood that relevant costs are incrementally incurred. Generally, they are variable in nature. Yes, they can be fixed costs if they are specifically incurred for the project. Indirect fixed costs, indirect cost are not relevant unless specifically incurred. Unless specifically incurred. Question number 2. Question number 2. Which of the following statements about demand and supply, which of the following statements about demand and supply is true? Okay. If supply increases, please try to understand. Sir, supply has increased. Sir, demand is constant. Now, 1 second, please, please. I want to see all the 4 statements. Now they are asking us which of the statement is true. Now please see why. Because when you see in the recording, it will look better. Supply increases and demand remains constant. Okay, supply has increased, DD is constant. SS means supply, DD means demand. Sir, the equilibrium price will rise. Please understand. Demand increasing and supply falling leads to increase in price. It creates a scarcity of goods. Scarce goods are expensive in the market. Here, supply is increasing. आ रहा market में. You don't want also bloody the good is available. What will you do with that good? Eat it, apply it on your head. What will you do? You'll ignore it. And at such a time, the price of such a good is obviously going to fall. This is a wrong statement. This is a wrong statement. Sir, if demand increases, and sir, if the supply also increases, sir, equilibrium quantity will fall. Sir, in such a scenario, we cannot determine the equilibrium quantity. Why? Because you need to understand that it has to be properly mapped out on a schedule and only then you can do it. Just on this statement, you cannot understand. Sir, if demand increases and supply decreases, sir, the goods will become scarce. Goods are scarce. Sir, example, oil. Oil has a rising demand and a falling supply. Automatically, what will happen to the price? The price will increase. This has to be your answer. Sir, if demand increases and supply is constant, the equilibrium price will have to rise because shortage will eventually happen. They are saying fall is wrong. They are saying fall is wrong. I hope you are able to understand this particular concept. Yes. So what is your answer? Your answer for question number 2 is your option number C. Please ensure that the recording is watched and you are making notes of this. In order to sell at the rate of outputs in a market controlled by the monopolist, the price is set where? What is the meaning of monopolist? A monopolist means somebody who is the sole supplier of the product. A monopolist controls the price. A monopolist controls the price. Please try to understand. Monopolist will go for a pricing that gives him a profit. But what if people find an alternative to the product? Sir, give me an example. I don't want to go in train, I'll take a bus. I don't want to go in train, I'll take a rickshaw. I don't want to go in train, I'll take a Uber. I don't want to go in train, I'll drive my car. I don't want to go in train, I will walk. I don't want to go in train, I will use my motorcycle. There are so many options. I will take a Rapido bike taxi. There are so many options. A monopolist, where he starts squeezing you, people will invent another product so that your product is not needed. You want an example? EV is an example. The oil suppliers squeeze us. We have invented EVs. Today, EVs are more cheaper to ride than a petrol car. Why? One charge, some 500 odd kilometers you can go. Please try to understand. So a monopolist, he controls the price. The next statement is very, very important. In such a way that he will not suffer a loss. In such a way that he will not suffer a loss. Sir, if I don't have a loss, it shows very clearly that my cost is equal to my revenue. But for every additional product, every new product, my marginal cost has to be equal to my marginal revenue. Where this is the scenario, at such a scenario, the monopolist will be ready to sell. Why does a monopolist sell at the marginal cost? Because it is his break even, he is not making a loss. He is not making a loss. Then he can do various things like using an economy of scale up to a level of production, reduce the cost, use that, put up the constant selling price. There are so many things he can do. I don't care because it's not asked in the question right now. What will a monopolist always do? He will try to make sure that he will not suffer a loss. And where does a monopolist not suffer a loss? Where marginal cost is equal to your marginal revenue. This is the answer to your question. Price equals to marginal cost. No, price nahi. We are always going to take into consideration the marginal revenue. The revenue is what marginal revenue is the additional revenue that you incur, that you enjoy for the additional cost incurred. Marginal revenue equals to average total cost. No, it has to be equal to marginal cost. It has to be that incremental cost. Price equals to average total cost. No, it has to always be your marginal cost. Marginal cost is the additional cost incurred for that one product. Marginal revenue is the additional income earned out of that one product. Monopolist, always remember what is the price determination of a monopolist. What is the price point of a monopolist? He will sell at marginal cost, because at this time there is going to be no loss for the monopolist. I hope you are able to understand this concept very, very clearly. Let's go to the next one. So your answer is option number B. Now we are looking at question number 4. Please try to understand. This is a beautiful question. A company produces and sells a product that has many identical alternatives in the market. Sir, please try to understand that the substitutes are high. Do you remember? I'm talking to my Apex students. Do you remember our price elasticity lecture with respect to determinants of price elasticity of demand? What are the determinants of price elasticity of demand? Substitutes, income, come on, luxury or necessity, and decision making time. This is the 4 items that are the determinants of the price elasticity of demand. We did this in our lecture. In this, what are they asking us? They are asking us question with respect to elasticity by using the substitute. What is the meaning of elasticity, please? Please consider the meaning of price elasticity. Formula, sir, percentage delta Q upon percentage delta P. Sir, price elasticity, if it is high, sir, if the substitutes are high, what will happen? Sir, if the substitutes are high, the price elasticity is high. The price elasticity is high. Sir, if the price elasticity is high, can I say that the price elasticity is greater than 1? Therefore, can I say percentage delta Q is greater than percentage delta P? कौन बोलता है मुझे सिर्फ कॉस्टिंग आती है? इको भी आता है. Pay attention. The percentage delta Q is greater than percentage delta P. Sir, at such a time, what should I do with respect to the price? Sir, the price should fall. That is when the total revenue will rise. Agree or disagree? Yesterday, we studied the relationship between price and revenue, elasticity and revenue. Where it is an elastic product, price has to fall for the total revenue to rise. It was there in our revenue chart. Let me check if the revenue chart is still available. Let me check. Here it is. Total revenue rule. If the selling price per unit rises, total revenue falls. Selling price per unit falls, total revenue rises. This was there in our revenue chart yesterday. We are looking at a product whose substitutes are high. Elasticity is also going to be high. Agree or disagree? Agree, sir. Let's get back to our discussion. Sir, management has to consider all of the following. Except, now please try to understand when you get such questions in the exam. Except means that one statement is a wrong statement, and your answer is that wrong statement. So the 3 statements are going to be correct. One statement is going to be a wrong statement. You have to identify that wrong statement. Demand for the product is elastic. Yes, as substitutes are high. Increasing prices can help increase the revenue. No. It is a price elastic demand. Therefore, selling price per unit should fall for total revenues to rise. And if selling price per units will rise, total revenue will fall. The firm in this case is operating as a price taker. Yes, it is a price taker because the substitutes are high. That cannot influence the prices. Yes. What can it influence? It can influence only product offering. It can influence only what? Product offering. Why? I will make my offering more superior, thereby making my product more attractive, because I cannot sell at a price higher than this price. Are you understanding what I'm trying to say? Sir, these 3 are justified. This is my answer. Yes, because it is a wrong statement outrightly. But I want to see the 4th statement also. What is the 4th statement? collect information about market prices and sell the product at the market price. Sir, this is common sense. Sir, you are saying, sir, this is a water bottle. In this, there is water. If you drink it, you will not be thirsty. क्या बात कर रहे हो भाई साहब? तो सब जानते हैं, मेरी अम्मा भी जानती है बात. Are you understanding? What value are you adding by this statement? Of course, you will collect all the market information and sell at the market price. I don't even want to dignify that option by putting my pen onto it. I just want to say that this is the thing. Option number D is common sense. Your answer is option number B. The most important statement for our Apex students over here is the price chart. But why should all the students not enjoy? Let us look at the price chart. Let us revise the concept of the price chart. Sir, we are talking about total revenue rule. For students who don't understand my language, this is the word rule, because people know that I write the word risk also like this only. It looks when I write. So what is this? Total revenue rule. If the product's price elastic, it's a price elastic product. Selling price per unit, if you increase it, total revenue will. For an elastic product, reduce the selling price, total revenue will. For an inelastic or a less elastic product, always increase the price. The revenue is going to rise, because always remember, percentage delta Q is going to be either zero because of inelastic. If it is less elastic, percentage delta Q is going to be less than percentage delta P. In such a scenario, let the selling price per unit be more, increase it. People jhak maar ke will buy your product because they need it. So what is such a product? Necessities. Sir, it is a unitary product. Selling price increase, no impact. Selling price decrease, no impact, because percentage delta Q is equal to percentage delta P. It's a very important concept for what? For the unitary wala. For the what? Unitary wala. Sir, anybody who knows the total revenue rule can break down all the necessary MCQs of unit number 3, decision analysis. This is unit number 3, decision analysis. This is a pricing question. This is a theory question. One value addition to all my children. Sir, question number 1 is unit number 3. Sir, this is a theory question. I want all of you to make a note of this while studying also. Question number 1 is from unit number 3. It is theory. Why? At the end of the 100 marks, we will do a pie chart like this. What is the pie chart? In the pie chart, we will have two analysis. First, how much was theory, how much was practical. Second, we will have a pie chart. Which came from which unit? From which unit how much? 1, 2, 3, 4, 5, 6. We'll have a pie chart. किधर से कितना questions आया. We will present this analysis at the end of each of our mocks. And remember, these are all IMA data questions. These are all IMA data questions. किसी का भी intellectual property right नहीं है इस पे. You sue the user of the question, the IMA will come and sue you. So please, don't teach your daddy how to make babies. Let's go to the next question. Question number 5. What is question number 5? The Danforth Corporation Circuit Production, Bapre, has a plant with a 10,000 unit capacity. Good. I'm interested in this. This is my unit capacity. And it currently produces 10,000 circuits per year. Matlab currently, per this, it is at full capacity. Currently. It incurs 5,000 in variable for its current production. 50,000, sorry, it incurs. मेरा चश्मा किधर है? मैं कल से ढूंढ रहा हूँ, घर पे भी नहीं है. चश्मा किधर है? हाँ, चलने दो रिकॉर्डिंग, दुनिया को जानने दो कि मेरे को चश्मे के बिना दिखता नहीं है. अंधा है बेचारा प्रोफेसर. दो इधर. चश्मा नहीं है, सोच रहा हूँ. हाँ. Now please pay attention. The company incurs 50,000 variable cost for its current production and carries a 40,000 fixed cost burden. Danforth has explored other alternatives and knows that the next best alternative will produce a $2,000 contribution margin for a 1,000 unit run. If Danforth has the opportunity to fill the special order. Sir, what is the meaning of this? First, they confused you by saying that you are at full capacity. What did they do? They confused you by saying that you are at the full capacity. Now they are saying, if you have the opportunity. If you have the opportunity का मतलब क्या है? You are not at full capacity. You are not at full capacity. Please try to understand this concept. If you have the opportunity to fill the special order, means you are not at full capacity. If you are not at full capacity, you can accommodate this product. Sir, I am making the following statements. We are not at full capacity. Agreed or disagreed? Yes. Therefore, we can make the product. Therefore, we can make the product. Agreed or disagreed? Please tell me that. Sir, if we can make the product, 1 second. Huh? 1 second. Huh? Sir, we are not at full capacity. Therefore, we can make the product. Sir, therefore, no additional fixed cost. Therefore, no additional fixed cost. Agreed or disagreed? Please tell me that. Therefore, no additional fixed cost. Sir, relevant cost so far. Sir, the relevant cost so far. First, it will include my all the variable cost. It will include my all of the variable cost. What is my variable cost? Sir, my variable cost for 10,000 circuits is 50,000. So my variable cost is $5 per unit. Agreed or disagreed? Sir, so my variable cost is 5 per unit. Yes, sir. Sir, the next best alternative would produce what? A $2,000 contribution margin for a 1,000 unit run. Sir, do you know what this means? Sir, this means that I have an intention. I have an to earn a contribution of $2,000 by producing how many units? By producing 1,000 units, which shows that I want $2 per unit. What do I want? I want $2 per unit. Second, per unit, I want a contribution of how much? Of 2 per unit. I want a contribution of how much? 2 per unit. Sir, so this is a relevant cost because it is incremental. This is a relevant cost because it is incremental. This is a relevant cost because it is my opportunity. I want to earn this. Therefore, what is going to be my price per unit? It should be 7. If it has an opportunity to fulfill, the price per unit of the product of the order should exceed how much? Should exceed 7. 2 is only contribution, 5 is only variable cost, 7 is the right answer. This is the justification. And let us look at the last option. The last option beta that I can see is 11. 11 is a wrong answer because it includes the fixed cost. I don't need to recover my fixed cost. I am writing over here. I don't need to recover. I don't need to recover my fixed cost as it is within range, as it is within the range. Please try to understand this concept. If it was beyond the range, any additional fixed cost is incremental because I am additionally incurring it. Fixed cost stay fixed within a range. I have a 10,000 unit capacity range, and if it has an opportunity to fulfill, it shows that this particular statement. What statement? If it has an opportunity to fill. Sir, what does this statement signify? Sir, this statement signifies that you are within the range. That you are within the range. I hope you are with me on that. What does this statement signify? That you are within the range. I hope you are able to understand. So over here, total fixed cost. Over here, total fixed cost is not relevant. Fixed cost is not relevant. I'm writing over here not relevant. There's some slight issue with my tablet. I'll just address it. I'll just pause the recording for a minute to address the tablet issue. Your answer is $7. Question number 6 of US CMA 2 mock number 1 is from International Finance. It is unit number 2. It is a practical question and it is regarding futures. It is regarding futures. Now let us take a look at this question. On 30th of September of year 1, cable company entered into a short position into a futures contract. Sir, what did they enter into? They entered into a short position in a futures contract. Full stop. Sir, please try to understand what is the meaning of short position. Sir, what is a short position? Sir, short position in a future contract means selling a contract with the expectation that future prices will fall. Sir, short position means to sell in future. Sir, what is the meaning of long position? Long position means to buy in future. Sir, who takes a long position? Sir, a bullish person will take a long position. Sir, who will take a short position? A bearish person will take a long position. Please, a short position. Please try to understand this. Now, what have you done? You have entered into a short position in a futures contract to sell 50,000 sterling pounds, Great British pounds. Sir, so this futures is a currency future. This is a what? This is a currency future. Please try to understand this. What is this? This is a currency future. To sell 50,000 pounds for 1.25 euros per pound on 31st of December, year 1. Okay. Okay. So, what is this? Sir, please try to understand. Sir, you are dealing with a currency future. You are dealing with what? What is a currency future? A future on which foreign currency is traded. On this currency future, you have taken a short position. What have you taken? You have taken a short position. What is the meaning? Means you have agreed to sell currency in future. Now, what is the deal that you are talking about? You are talking about selling 50,000 Great British pounds at the rate of 1.25 euros per Great British pound. This is the scenario that you are in. Please try to understand. If you are going to sell 50,000 euros, 50,000 pounds at the rate of 1.25 euros per pound, at the rate of 1.25 euros per pound, please try to understand that as per this future contract, you have agreed to sell 50,000 Great British pound. You have agreed to sell 50,000 Great British pound at the rate of euros 1.25 per Great British pound. Means you have agreed to sell, that is short, 50,000 Great British pounds for 65,000 euros on 31st of December of year 1. Agreed or disagreed? Please tell me that. Agreed or disagreed? Please tell me that. How much is this? Sorry, this 60 to 500. I beg your pardon. Mistake. Eh? What is this? You have agreed to sell at how much? At 62,500. You have agreed to sell. What is the meaning? That in the future, you will sell how many pounds? 50,000 pounds at the rate of 1.25 euro per pound. Means you have agreed to sell, that is go short, for 50,000 pounds for 62,500 euros on 31st December of year 1. On 31st December of year 1. Agreed or disagreed? Sir, I want to comment more on this because this is derivatives. Sir, you have agreed to go short. What is your fear? Sir, your fear, or you fear that the pound will get, cheaper. What is the meaning of pound will get cheaper? Means today you are giving for 1 Great British pound 1.25 euros. You feel in the future for this one same Great British Pound, you are going to give less than 1.25 euros. It shows that you fear that pound will get cheaper, into bracket euro will get stronger. This is what you feel. This is what you feel. Please try to understand this concept. This is your fear. This is going to happen. So, to make a maximum amount of euros right now, what did you do? You took a future short position on 50,000 Great British Pound. That is what you did. Whether or not your decision was correct will be determined by 31st of December year 1 spot prices. By 31st December year 1 spot price. Let us see. Lag gayi what? The spot price is 1.3. The euro got weaker, the pound got stronger. 1 pound is now equal to 1.3 euros. So what is the meaning of this? Beta, when you went into the market to buy one banana, you had to pay 1.25 rupees. Now for that same one banana, you are paying 1.3 rupees. More money is going, same banana is coming. So banana got stronger, rupee got weaker. Here, the pound got stronger, the euro got weaker. Now please try to understand that if you would have sold 50,000 Great British Pounds on 31st of December, in euros, you would have earned how much? Sir, I would have earned 50,000 pounds at the rate of euros 1.3. At the rate of euro 1.3 per pound, sir, I would have earned a total of 65,000 euros. Your fear was wrong. The pound got stronger, the euro got weaker. So what happened? You would have sold this much, you would have earned, but because of your future position, now how much will you earn? So you have a choice whether to sell this for 60 to 500 and make a loss, or pay the difference. So what is your future short position? Sir, my future short position takes me to 62,500. Sir, what is my spot position? My spot position is 65,000. So future short position, what is your selling price as per that? Sir, the selling price is 62,500. Sir, what is the current market price? Sir, the current market price is 65,000. You are selling something for 62,500 whose market price is? Sir, do you have a gain or a loss? Sir, I have a loss. Of how much? Sir, I am making a loss of 2,500. What? Euros, dollars, pounds. Sir, this is euros. Sir, this is euros. So my loss is also. Sir, I have a loss of 2,500 euros. I have a loss of 2,500 euros. Agreed or disagreed? Please tell me that. Does this concept make sense to you? I believe I have justified this concept, but here for Faraz, I hope you're paying attention.
यस सर समझ गया
Now for
अंडरस्टूड
Faraz,
बट इट इज रिटर्न दैट कि सर मतलब अपन खरीद लिए दिसंबर को ही
hold on ना. अपन खरीदे
ओके
नहीं है, अपन बेचे है. You are going in a
ओके ओके
short position. Short means
यस
तुम बेच कितने में
तो
रहे हो?
सर
1.25. ऐसे देखो, पे अटेंशन. तेरा सेलिंग
यस
प्राइस क्या है फराज? 1.25.
50 हाँ 1.25
और
यस
मार्केट प्राइस क्या है? 1.3.
1.30
तो तेरा 0.05 का क्या हो रहा है? लॉस हो रहा है. 0.05 का क्या हो रहा है? लॉस हो रहा है.
लॉस
कितने के
यस
पीछे? 0.05 पर पाउंड तू लॉस कर रहा है. ऐसे कितने लॉस है तेरे, पाउंड है तेरे पास? 50,000.
50,000
तो तेरा
यस
कितना हो गया? तेरा 2,500 यूरो
हाँ
का क्या हो गया? तेरा लॉस हो गया. आ रहा है समझ में? प्लीज ट्राई टू अंडरस्टैंड.
यस सर
Now, let's do one thing. I'm making a separate video for you for futures concept over here. I'm going to talk on
ओके
futures concept for some time. I'm making a separate video over here. I'm going to stop the video of the mock. I'm going to stop the video of the mock, and I'm going to talk about futures for some time. I'm going to talk about what? Futures for some time. The way we talked about options prior to the mock starting. So the mock recording is stopping now. And for the mock, this will be your first video, first 6 questions. Then you'll have another video coming up on your mock LMS product. So right now I'm stopping this.